Welcome to the deep dive, your shortcut to understanding what's truly important and surprising about the world around us. Today we're diving headfirst into, well, the dynamic and rapidly evolving beverage market, specifically the booming energy drink category. We're seeing this really fascinating shift, Consumer preferences are increasingly gravitating towards healthier, more functional options. Our mission for this deep dive is basically to unpack the latest Q2 2025 earnings report from Celsius Holdings. We're going to explore the key financial highlights,
Their strategic moves, and the market trends that reveal how Celsius Holdings isn't just like a player in this space, but is actively defining what they're calling the Celsius Holdings has declared this a strong quarter, which, okay, companies often say. But they're also making the claim that the energy category itself is outperforming the wider beverage market. That feels like a pretty significant statement, doesn't it? What's the most compelling evidence for that? I mean, what underlying factors are truly fueling this kind of exceptional growth beyond just, good marketing?
It absolutely is a bold claim, but yeah, the data really seems to back it up. What's fascinating here is that the broader energy category is showing impressive retail sales growth. We're talking over 15% year over year. And this isn't just some fleeting trend. It points to, I think, a profound redefinition of what energy even means to consumers now. They seem to be moving beyond just, a quick jolt. They want sustained, clean, functional benefits. This shift is driven by what the report calls tailwinds. New consumers being drawn to functional zero-sugar innovation, and also a growing perception that these drinks offer great value. The classic energy drink brands, they've largely struggled, I think, to adapt to this.
Right, and Celsius Holdings isn't just riding that wave. It sounds like they're actively creating new currents. So to put their performance into perspective, what do the actual company-wide financials for that 13 weeks ending June 29 tell us?
Well, their numbers are, frankly, stellar. No other way to put it. Their total retail sales soared by 29%, and volume jumped 31% for that period. And get this, their consolidated revenue nearly doubled year over year. It hit almost $750 million, $739.3 million to be exact.
Wow, nearly doubled.
Yeah. And their adjusted EBITDA, which is, a key measure of core operational profit, before all the deductions like interest and taxes, it was a record, over $200 million in 2025. That's a 109% increase from the prior year. If we sort of connect this to the bigger picture, it really underscores their strong operational efficiency and just exceptional market capture.
Okay, and what's truly insightful, I thought, was that Celsius Holdings actually surpassed $4 billion in past 52-week retail sales in tracked channels by July 20th. That figure, they said, is more than the next 8 ready-to-drink energy brands combined.
Exactly. That's the stat that really stands out.
Yeah, it's not just an abstract number, is it? It reflects how one company isn't just capitalizing on this trend, but is actively shaping consumer expectations and pulling market share not just from competitors, but maybe even from entirely different categories, like, say, traditional coffee.
It definitely feels that way. They're changing the game.
Speaking of market leadership, it wasn't just Celsius's organic growth driving these huge numbers, right? They made that major strategic move recently, acquiring Alani Nu. How does that acquisition impact their
Overall success this quarter. And what does Alani Nu's performance tell us about, well, how that integration is going?
Oh, the Alani Nu acquisition, which, remember, only closed on April 1st. It's been an immediate game. Yep. And its dollar sales rose a staggering 129%. That made it the largest market share gainer in the RTD ready-to-drink energy category. It reached a 6.3% share for those 13 weeks. What's really fascinating here, I think, is Alani Nu's knack for innovation and capturing new consumer interest.
Yeah.
With flavors like sherbet swirl and cotton candy.
I heard about the cotton candy one.
Right. That one apparently set new sales records in its debut at Walmart by orders of magnitude, according to the report. It just shows how much consumer demand there is for these novel, appealing options. And they're not stopping. We're seeing exciting upcoming seasonal LTOs, limited time offers like Witch's Brew and a new pumpkin cream.
That level of immediate impact right after an acquisition is pretty remarkable.
It truly is. Actually, its outperformance was so significant that the contingent consideration, basically a potential bonus payout tied to performance for its acquisition, was remeasured to its maximum. a $25 million payout.
Wow. Yeah, it's like an immediate validation of the deal's value. And its digital presence is equally strong. It jumped to a 10.9% show on Amazon during the Prime Day event.
Okay, so Alani Nu is firing on all cylinders, but the core Celsius brand isn't just holding its own, right? It's showing resilient growth alongside this new powerhouse.
Absolutely. The Celsius brand itself contributed a very substantial $438.1 million in revenue, so it's definitely showcasing its continued strength.
Its unit sales grew 6.1%, dollar sales by 3%, and it achieved an 11% market share for the period. So still incredibly strong.
And they're innovating too, aren't they?
Yes. Absolutely. And it seems to be working. The Celsius brand's e-commerce presence is also really noteworthy. It was the #1 trademark in RTD Energy on Amazon during that summer Prime Day event, holding an 18.4% share. That just highlights their digital agility and connection with consumers online.
And offline, too.
Yes. Additionally, Celsius's food service volume grew 9.8% year over year. That now represents about 12% of North America's Celsius brand sales to PepsiCo. So it illustrates their diversified growth across different channels.
Okay, let's unpack this a bit more then. Who are these consumers flocking to these brands, Celsius and Alani Nu, and what broader trends are really driving this, well, phenomenal growth? What can we learn about the modern energy consumer from this?
Well, it seems pretty clear that consumers are making more, let's say, intentional beverage choices these days. They're actively opting for functional, better-for-you products that fit their active and wellness lifestyles. It's not just about energy as a quick fix anymore. It's more about integrated wellness.
Right, and this demand seems to be fueling a pretty significant demographic shift in the energy category overall. Who are these new consumers that Celsius and Alani Nu are managing to attract so successfully?
Yeah, that's a key point. This shift towards zero-sugar functional energy drinks is definitely bringing in entirely new consumer segments. We're talking specifically about females, Gen Z, and also a growing number of consumers who are actually switching to functional energy drinks from other energy sources, like ready-to-drink
Cold coffee.
Interesting. So switching from coffee, even.
Exactly. It's potentially a huge market that Celsius Holdings seems uniquely positioned to tap into right now.
And are they actually capturing and keep...
With them?
Yes, and what's truly fascinating here is the repeat purchase rates. They're over 65%. That's incredibly strong and indicates significant brand loyalty. People aren't just trying it once. Buyer surveys apparently consistently rank Celsius Holdings among the brands most likely to gain even more market share. And both brands are clear standouts in brand loyalty, particularly, it seems, among Gen Z and female consumers, those groups we just mentioned.
And they mentioned a specific marketing campaign.
Right, they noted that their Life Fit Go marketing campaign has led to
The largest increases in Celsius household penetration seen in the shortest time periods. So it seems their marketing message is really resonating deeply.
Okay, so beyond the really impressive sales numbers and market...
That's a great question. Looking at their financials, their consolidated gross margin held remarkably steady at 51.5% this quarter, which is pretty impressive, especially considering it now incorporates Alani Nu's initially lower margin profile right after the acquisition.
How do they manage that?
Well, the report says the margin was supported by a few things. Favorable material costs, improved production yields, leverage gains through their vertical integration initiatives, basically doing more themselves, and also a strong product and channel mix.
They did clarify one accounting detail, though. There was a specific one-time adjustment for the Alani Nu acquisition inventory, a $21.7 million purchase accounting inventory. Right. They mentioned tariffs didn't materially impact Q2, mostly because of how they manage inventory FIFO, first in, first out. But they do anticipate a slight impact on profit margins in Q3 and Q4 from tariffs, though they still expect gross margin to stay in the low 50s. It shows they're proactively managing those cost factors.
Okay, so they seem to be managing margins well despite the growth, but beyond that, what strategic investments are they making to keep growing and strengthen their market position? What's next?
Yeah, they're clearly investing heavily in the future. They've launched that Live Fit Go marketing campaign, which they describe as Celsius's most ambitious creative yet. It aims to connect purposeful energy to real-world action. Early results sound strong, and they mentioned positive retailer feedback. And, if we connect this to the bigger picture, these kinds of strategic investments are absolutely crucial for sustained growth.
Any specific big marketing pushes coming up?
Yes. Celsius is planning its first national TV commercial during NFL broadcasts this fall. That's a big step. And they're also collaborating with country music star Kelsey Ballerini, which seems like a smart move to further connect with that key female consumer demographic we talked about earlier.
Makes sense. What about internationally? Are they growing there too?
They are. International revenue grew 27% year over year. It's approaching a $100 million business annually. Their strategic focus for the second half of 2025 seems to be on deepening their presence in existing key markets like Australia, the UK, and France, rather than, say, spreading too thin by launching everywhere at once.
Smart. And internally, are they building the team and infrastructure to handle all this? You mentioned vertical integration.
Exactly. They highlighted building internal capabilities. For instance, welcoming John Cole as an Executive Vice President of Technology. His role is specifically to scale their infrastructure for what they called a multi-brand omni-channel future.
Okay, multi-brand omni-channel future. What does that signal for their long-term strategy?
Well, I think that's a really critical piece of the puzzle here. Bringing in executive talent like John Cole, focusing specifically on technology and infrastructure, it's about more than just managing the current growth rate. It's about building a robust, scalable system, one that can support multiple brands, Celsius, Alani Nu, maybe others, down the line across all sorts of sales channels, traditional retail, e-commerce, food service, all while maintaining efficiency. These strategic investments in this kind of operational discipline are crucial
For not just maintaining, but actually extending their growth and leadership in what's becoming an increasingly competitive market. It's about building a sustainable framework, really, for long-term category dominance.
Wow, what an insightful deep dive into Celsius Holdings' Q2 performance. It's really quite a story. We've seen their impressive overall growth, that powerful synergy kicking in already between their core Celsius brand and the newly acquired Alani Nu, and how they really seem to be actively defining and leading this modern energy era by truly understanding and catering to those evolving consumer demands for functional, better-for-you beverages. It feels like they're not just
Selling drinks, they're kind of shaping a lifestyle, aren't they?
They certainly seem to be tapping into something significant. And, this raises an important question for all of us, I think. As consumers increasingly